Hello and welcome to another trading day in Business Incorporated live from Channels HQ right here in Lagos. Here's what's coming up in the next 55 minutes. Vice President Kashim Shettima participates in the fire session at the African session at Davos. And it's another new high for the NGX Onshore Index. It hits the 87,000 mark at intraday. And Shell PLC has reached an agreement to sell its Nigerian onshore oil assets to a local consortium for over $1.3 billion. And it's great to have you join us. Let's get the top stories that set your agenda now. Our the Nigerian National Petroleum Corporation Limited, NNPCL, says it is seeking credible operations and maintenance companies to operate and maintain the Port Harcourt refining company. In a statement released, the state-owned company explains that the outsourcing for refineries maintenance is aimed at ensuring sustainability to allow it to meet the country's fuel supply and energy demand. And a statement from the NNPCL mentions that the scope of work for operations and maintenance includes short and long-term production operation, planning, refinery business processes, production and operation execution, environmental management, amongst others. The NNPCL says applicants need to register their company for the participation in the bid process through the NNPCL NIPEX electronic tender portal from now till January the 29th. It adds that expression of interest will be open virtually after all documents meet the submission deadline on or before 12 p.m. on February 26, 2024. And artificial intelligence is set to affect nearly 40% of all jobs, and that's according to a new analysis by the International Monetary Fund. In its latest report, IMF's managing director, Kristalina Georgieva, said AI is likely to affect a greater proportion of jobs, put at around 60% in advanced economies. She explained that in most scenarios, AI will likely worsen overall inequality, while its proliferation has put its benefit and risk under the spotlight. At the same time, the multinational finance institution projects that the technology will affect just 26% of jobs in low-income countries. Meanwhile, Ms. Georgieva asks policymakers to address the troubling trend to prevent the technology from further stoking social tensions. And as the World Economic Forum enters its second day, the Vice President of Nigeria, Kashim Shettima, has participated in an African Economy of Skills session alongside the Secretary General of the African Continental Free Trade Area, Wamkele Amena, the Senior Administrator of GPAA, and South Africa's Mary Vilazika, and Executive Vice President Africa and Asia, Lopez Larsen. Meanwhile, the highlight of the 2024 Chief Economist Outlook session held on Monday, still prompting conversations. The highlights include 56% of chief economists expect the global economy to weaken in 2024, amongst others. Take a listen.
Farmers are not weaning. The average age of the Nigerian population is 19. And this huge youth bulge, we can truly transform them into demographic dividends. I'm afraid I'm an eternal optimist. I don't want to see it as a demographic disaster that will consume all of us. Because once we wear our thinking caps as leaders, once we reach out to the global community for partnership, I believe that Africa stands poised to be a driver of change and growth in the world. According to Korn Ferry, a global consultancy outfit, by 2035, there will be 65 million global talent deficit. The United States will suffer from 6 million, Brazil, 6 million, Russia, 6 million, even India, the global capital of outsourcing, will only have 1 million talent surplus. And nations like Nigeria, Egypt, generally the African continent, we are in a position to really take advantage of the digital revolution in the world. For instance, Nigeria, there are more English speakers in Nigeria than in India. Our proximity to Europe is an added advantage, and most importantly, even our diction.
All right, that's Vice President Kashim Shettima right there at the fireside session at Davos today. Well, said before, it's day 2 at Davos, and we still have Juliana Olayinka covering proceedings at the forum. But today, we'll be speaking with Mr. Armstrong Takang, CEO, Ministry of Finance Incorporated, MOFI, and he's right there at Davos and joins us via Zoom. Great to have you on the show. Good afternoon.
Good afternoon. Thank you very much. It's great to be here.
Fantastic. So it's day 2 at Davos. Give us a sense of your key takeaways from sessions held so far.
Well, thank you very much. There are a couple of themes that are coming out here from the discussions. First of all, we're here with our delegation is being led by His Excellency the Vice President of Nigeria, Senator Kashim Shettima, and also the Honorable Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, and some of my colleagues, heads of agencies, as well as ministers. We're here to really participate in the discussions that are going on here. In terms of some of the takeaways, one is clearly in line with the theme of this event, which is rebuilding trust. It is very clear that even though it is a discussion that is happening at the global level, it also demonstrates the commitment of our president, who really has been taking a lot of steps to ensure that trust is rebuilt, not only within the country, but also with our international partners, which is why some of the key decisions are being taken to ensure that people have trust in government, people in Nigeria have trust in government. You also have a situation whereby the international partners that we need to work with also have trust in the government, that the government would keep its commitment. And I think that's what the president has been demonstrating. So this is really not just a global conversation, but our president has clearly demonstrated that it is something that is also local and has taken steps towards that. That is the first takeaway. The second takeaway is really around the discussions on artificial intelligence, in the sense that artificial intelligence has really been making a lot of difference, not only in terms of the changes that is likely to pose in the workspace, in terms of the number of jobs that are going to be lost through artificial intelligence, but also new jobs and new opportunities that are being created through the deployment of artificial intelligence. We're seeing that already with applications in different spheres of the economy. So these are some of the takeaways, but there's a third one, which is really around the things that we in Africa need to do to mobilize and attract investments, to deploy that investment into critical sectors and priority sectors of our economy. Those are some of the takeaways that are coming out of the discussions going on here at Davos.
Right, and talking about AI, there we did see the report from the IMF that in low-income countries, it's just about 25% of jobs that might be, taken over by AI, but a bigger percentage in developed economies. But bringing it down here, what do you think should be the way to make sure that even though this 25%, of jobs are being taken by AI, somehow there's some kind of buffer or hedge, for those that are still, managing to hold their jobs in Nigeria?
I think one thing to remember is clearly the fact that when you talk about artificial intelligence, is really, a lot of things that are repetitive can easily be automated. They can be programmed, and computers can effectively do those things. So from our own perspective, I think the key thing is that as an economy, we need to begin to develop strategies that ensure that our people are acquiring knowledge, they're developing skills and building competencies that are not easily programmable, or things that you can easily have computers do for you. And so I think our educational system needs to recognize that. The way we work in the workplace needs to also recognize that we need to be able to develop competencies and skill sets that are not easily programmed or automated. I think when we move in that direction, then we're likely to have our people offer something that is greatly unique, and also make them less vulnerable to artificial intelligence.
All right, talk to me or give us a sense of, the kind of investments you're looking to attract at Davos and your vision for MOFI.
Well, first of all, I think let me let me put the context around MOFI. As you know, MOFI is the investment arm or the trusted custodian and the active manager of all federal government investment assets across different asset classes and across different sectors of the economy. And so as a result of that responsibility that has been thrusted upon us after the restructuring and repositioning of MOFI, there are three key areas that are important to us. The first one is really establishing what we own as a country. There's been a lot of discussions around what we owe, and we can tell you precisely how much we owe, who we owe, and what our debt repayment schedule is. But we cannot say the same thing for what we own in terms of the quantum of shares we own in corporate assets, the oil and gas assets we own, the real estate assets that we own, solid minerals, intangible assets as a whole, right across the spectrum. We don't have an authoritative single source of truth about what we own. And so the first mandate that Mr. President has given us is to establish what we own, the value of what we own, and begin to see how that can be used to attract investment and contribute towards the development of our economy. The second main objective of our mandate is really professionalizing state ownership in terms of the shares that we own in commercial entities and ensure that we not only professionalize them, but also put the right governance structures, provide the right capital around these corporate entities with the view of value creation. In other words, for every share that we own in any company, we need to create value. We need to create value in terms of capital appreciation of those shares. We also need to create value in terms of ensuring that it delivers liquidity through dividend payments. So that's the second main objective. The third one is really around mobilizing investments to deploy that investment across different priority sectors of our economy. For us, that is absolutely important. The president has made it very clear to us that there are a number of things he expects to see. The first one is to double our rate of GDP growth to about 7%. In other words, it has to be above our population growth. That's the only way you can see that your economy is growing. The second thing he's asked us to do is to put everything in place to grow our GDP base to $1 trillion within the next 8 years. We've also been asked to take steps to create tens of millions of jobs to address our unemployment challenges. Each of those things we've talked about cannot happen if we are not mobilizing large volumes of capital, both domestic as well as foreign FDI into the country to deploy them across the different facets of our economy. And so for us, we need to prioritize investments. We need to ensure that we're creating the right enabling environment that can attract capital into Nigeria. We need to make sure that we are deploying the capital and investment into priority sectors of the economy, whether it is agriculture, which is a fundamental aspect of it, technology, healthcare, manufacturing. These are all sectors of the economy that are priority for us. And so for us, we're building relationships with those that are owners of capital, that are looking for where to invest that capital. We need to begin to discuss with them to understand what is it that they expect to see in order to feel comfortable to deploy that capital in our neck of the woods. They need to also see from us that we have a pipeline of bankable projects that can attract the capital across different sectors of our economy, whether you're talking about oil and gas, you're talking about manufacturing, you're talking about technology, you're talking about healthcare. These are all areas that have bankable projects and opportunities for investors. But we need to communicate that to them, because the fact of the matter is that everybody is competing for the same volume of capital globally. But we need to ensure that we're not only communicating the opportunities that are in our country, but that ours will provide better returns for them than others.
All right, Dr. Takang, before I let you go now, MOFI has been in the news lately, with the federal government's 40% share in discos in Nigeria, moved from the Bureau of Public Enterprises to MOFI. Help us understand this, and it looks like your responsibilities, keep increasing at this time.
It's really interesting. Thank you for that question. Remember, MOFI was established in 1959. And the purpose of establishing MOFI was to ensure that when government is engaged in commercial activities, you separate that from the policy responsibilities of government. And in that case, MOFI has a responsibility to be the trusted custodian of federal government shares in commercial entities and also ownership of commercial enterprises. That is there, is in the law. The second aspect of it is to ensure that while it is in custody of that investment assets, it has to take steps to create value for the benefit of the Nigerian people. Unfortunately, it hadn't existed as an operating entity until very recently when government felt that we have too much interest in the commercial enterprise space that we cannot take a backseat on a spectator position. That government does not only have to be a trusted custodian of its investment assets, but has to take deliberate steps in not only enumerating, valuing those assets, optimizing those assets, financializing those assets to make sure we can leverage on those assets to mobilize investments. We can leverage on those assets to deliver on the social commitments that we have made to our people. We also leverage on those assets to contribute to economic development, sustainable and inclusive economic, as well as deliver financial returns to the shareholder, which is federal government of Nigeria. In other words, financial returns to Nigerians. Our corporate assets must deliver not only capital appreciation over time, but they also have to deliver financial returns that will contribute towards meeting our financial obligations, especially when it comes to mobilizing revenues to finance our budget. And again, for us, this idea of taking over the ownership of the 40% is really what should have happened in the first instance. Unfortunately, MOFI didn't exist as an operating entity, but now it does and has a governance structure that has a governing council, has a board of directors with a very credible chairman of the board, Dr. Shamsuddin Usman, that we all know, former Minister of Finance, former Minister of National Planning, as well as the Deputy Governor of the Central Bank. In the President's wisdom, that governance structure is very important. It's an operating entity, and the idea is to go back and do what it ought to have been doing, which is really bringing together all federal government's investment assets under one umbrella and ensure that we're leveraging on those assets, we're optimizing those assets, we're financializing those assets, and ensure that we can leverage on those assets to support government's investment program and also deliver returns to government that they can use to finance other social obligations that it has to the citizens.
Yeah, because right now the government needs all the revenue they can get at this point. I wish you luck at Davos. I hope you get all of those investments. Thank you so much, Dr. Armstrong Takang, CEO, Ministry of Finance Incorporated, right there at Davos. Thank you.
Thank you very much. It was great being on your show.
Thank you. All right, let's get a check on the oil markets now. We see oil prices were mixed today after posting losses in the previous session as broad economic concerns outweighed with tensions in the Middle East, leading to more tanker diversions. We see Brent crude futures gain about 3 cents, about 0.04% at $78.15 a barrel, while the contract had settled 14 cents lower. That was yesterday. U.S. WTI crude, that's down about 23 cents at $72.45 per barrel after the U.S. public holiday. That was on Monday. And in a significant development, Shell PLC has inked an agreement to offload its onshore oil assets in Nigeria to a local consortium for a sum of exceeding about $1.3 billion pending regulatory approval. Our see Shell's integrated gas and upstream director confirmed the details in a statement released today. It says the deals are important, emphasize on Shell's strategic focus on optimizing its portfolio and channeling disciplined investments into deep water and integrated gas ventures within Nigeria. This strategic move aligns with Shell's broader objective of exiting the demanding operational landscape of the Niger Delta region. In addition to an initial transaction amount, Shell expects to receive additional payments totaling up to $1.1 billion. The purchasing consortium, known as Renaissance, includes ND Western, Aradol Energy, First EP, and Walt Smith, and Petrolin. All right, let's get a sense of how this sale of its Shell's offshore, that Shell's PLC's onshore business will impact the oil and gas industry in Nigeria and other matters arising. Joining me now is Desola Sumoni, joins us via Zoom from the UK. Great to have you, Desola.
Thank you for having me on the show, Ladi.
Right. So we've seen one of the statements from Shell that would say their strategic objective is to exit the challenging operating environment in the Niger Delta region. So this sale doesn't look like what should be cheered at this time.
Thank you for that question, Ladi. I think we need to look at it in the broader context of things, right? Like you mentioned, Shell is moving from is divesting its onshore business and moving into deep water offshore business, which is more lucrative and it is less problematic. And over the years, Shell has been operating in Nigeria for close to 100 years, and they've had some challenges in terms of vandalization, oil spills, theft, sabotage, and as well as clashes with the local communities, which leads to expensive lawsuits. But in the broader context of things, in the last couple of years, 2-3 years, we've also seen a retreat or a divestment from Western IOCs. We've seen ExxonMobil divest from onshore business in Nigeria. We've seen Italian Eni divest. We've seen Equinor also divest. And this, again, citing the same reasons about the challenging environment, it is important to note that these agreements they've only been agreed in principle and they've not been approved. Many of them are still pending approval. But this tells us something. It also raises question about the business or the operating environment in Nigeria, particularly coming at a time where we desperately need foreign investment. So what does this imply for foreign direct investment, for example? What does this say to potential investors who are looking to come into Nigeria when they see this huge divestment from IOCs? But on the other hand, it is positive in terms of we now see more and more involvement of local oil companies in oil exploration in Nigeria. So that's the positive bit.
All right, but looking at the consortiums at this point, they refer to as a renaissance. Do you think they'll be able to navigate, the difficulties Shell is having to move away from?
That's a good question. Now that they seek or they've acquired, the Shell's business, I think that is entirely their own is entirely their own responsibility now to deal with, maybe being local, that might, kind of, maybe they can reach some agreements with the local community, or they can form a kind of, reach some agreements anyways to see if they can kind of reduce the sabotage or the theft. I think maybe it might help that, okay, these are my people, so I think it might help that they're local to be able to kind of reach some agreements with the local community, with the local militias, etc. to kind of
they can understand the language, I guess.
Yeah, that's my people, kind of thing. It is possible. I was not sure whether that's going to happen, but that's a possibility.
Right, we'll definitely keep tracking that as a developing story, at this time. But let's look at the inflation data for December. It came out yesterday, and that's definitely hotter than expected. If we put up that data now, we see headline inflation rose more than what we had in November. If you put up that data for me, it's hotter than expected, even higher than the FDC's forecast there. I see 28.92% for December. That's headline inflation. Food inflation keeps going higher, at 33%. That's a former percentage for unemployment, before the adoption of new data. So that's for food inflation. So talk to me, how are you seeing this data?
Thank you for that question, Ladi. A famous statistician said all models are wrong and some are useful. So we forecasted 28.7%. Inflation came in at 28.9%, which our forecast error is very little. We put a 0.5% margin of error, and so in terms of direction, we're right. In terms of magnitude, we're also right, given our margin of error. Now that is that. Next, in terms of these numbers are huge. The last time we saw anything like this was in around 1997 or 27 years ago, which shows that inflation is quite significantly high, and also is among the highest in the region in sub-Saharan Africa. I think the nearest one would be Ghana, which is around 21%, if my guess is right. So which shows that inflation is quite huge. And among the drivers, we know the key drivers are we saw food inflation also increase quite significantly. Core inflation also is also higher. But the drivers are, one, the FX issue, the knock-on impact of the liberalization of the foreign exchange market, and number two is the transportation and logistics challenges or the transportation and logistic costs as a result of the removal of PMS subsidy. So those are the main drivers. Obviously, we still have our supply bottlenecks, etc. The legacy structural issues still persist, but those are the key drivers at the moment.
Right.
Now, in terms of the implications.
Yes. Yeah, go ahead.
In terms of the implications, I think there's more and more pressure now on the central bank to keep on tightening, to still continue or to extend the tightening cycle when globally we are expecting a hold or we're expecting a switch in monetary policy stance from tightening to loosening as global inflation reduces. But in Nigeria, we are still seeing inflation trend upwards.
And definitely, talking about the NPC, it'd be very interesting to see our new central bank governor actually presiding over that meeting. Definitely, we're all looking out for that, and we're still waiting for a timetable to let us know when it's gonna start. And definitely, we're expecting more tightening, at this time. But we're seeing money supply growth about 39.33% to 72.01 trillion. Definitely, this has an impact on inflation at this time.
Definitely, by classic Eco 101, they will tell you inflation is simply when we have too much money chasing to feel goods, right? And this is the idea. We are seeing money supply increase. We are seeing quite significantly by up around 33% month on month. And this is part of why we are seeing higher inflation, but also more and more pressure on the foreign exchange markets. We are also expecting we are seeing some mopping up. The central bank is trying to mop up some of this excess liquidity using open market operations. The last stop rate for open market operations, I think, was around 17%. But at the same time, we are seeing national treasury bills, the stop rates for treasury bills declined to around 80%. That's the 1-year treasury bill to around 8-point-something%, I beg your pardon. So it seems as if on one hand, we are seeing more tightening we are seeing higher stop rates from OMO. On the other hand, we are seeing lower stop rates from the treasury bills market. So I think some alignment between the fiscal and monetary policy would be good. I think also having an actual monetary policy meeting to just set the agenda. Yes, we are seeing some actions here and there. We are seeing some policy notes here and there, but an actual policy meeting where the central bank governor can set the agenda, and just set the expectations for the year. I think that would be super helpful at this time.
All right, we'll definitely be looking out for that. But let's get to the global oil market now. We're still seeing it's still a very volatile market, at this time. But we're seeing the disruptions there with the issues with the Houthi situation. It's definitely pushing prices up. What are you seeing for 2024 when it comes to oil prices?
Okay, let me start with where we are, and I'll take to what we see for 2024.
Right.
Where we are now, we are seeing quite a lot of volatility in the oil market, as well as many other commodities markets. But we are seeing also oil trade in a tight range. Despite the volatility, we are seeing oil trade in a tight range. On the one hand, we are seeing the tensions or the instability in the Middle East, particularly the Red Sea region, which is one of the trade routes for oil tanks and other, apart from commodities trade, other trade as well goes through that. So that is, although it has not yet begun to physically affect a supply of oil, but if it persists, then it's likely going to begin to affect oil. We're also seeing something like a cold snap. So currently in Europe and as well as North America, we're seeing a cold snap, and that is affecting oil production. For example, in North Dakota, temperatures have declined to around -8, -15 degrees Celsius, and that is affecting oil production. In particular, this backing shale oil rig or oil well in North Dakota, we are seeing around 400 125,000 barrels shut in because of the extremely cold weather. We are seeing, like I mentioned, this instability in the Middle East. But also we are seeing weaker demand, prospect of weaker oil demand, and all of these factors are keeping oil in a tight range. In terms of output, in terms of outlook, I think three main factors are going to drive oil prices this year. On the one hand, that will be outputs, OPEC's decision, OPEC's outputs decision, OPEC plus outputs decision. That will be one key factor driving oil prices this year. Number two will be geopolitical tensions, whether this, this instability that we see in the Middle East, whether it escalates or persists. Also, the Israel-Hamas crisis, if that also escalates and moves region-wide, I think that's going to drive oil prices quite significantly. Also, the path of monetary policy. So currently, there's a meeting in Davos where, investors are just trying to get cues about what is going to happen with interest rates. Are we going to see more holding? Are we going to see more tightening? And they expect some economists or some policymakers have suggested that we need to tighten some more. Although we think that this year we're going to begin to see some loosening, some forecasts as early as Q1. So those key factors are what's going to drive oil prices this year.
Yeah, and definitely with half the world, heading to the polls, also in 2024, definitely we're going to see a lot of volatility at this point. Thank you so much. It was great having you, Desola Simone, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you for having me.
All right, we'll take a break now. When we come back, we head straight to the markets, seeing the NGX All-Share Index hitting a new high at intraday today. That's next. Do stay with us. Welcome back. Well, it's all about new highs right here on the NGX All-Share Index, and we have Willie Bong with the details.
Hi, good afternoon, laddie.
Wow.
It was just a phenomenal jump at intraday. When I checked, I was like, did I see correctly? Because 2.93%, and it was still climbing at the time I checked.
Almost 3%.
And 3,000 points to 87,000 points. Because we closed yesterday at 84,000 points, and seeing it at 87, I'm just like, what's happening in the market?
That's incredible.
A very incredible jump. And we saw stocks like Dangote, Sugar, NASCON doing their magic and Transco as well. And wow, I don't have all the details
with all
right now, but
the new entries to Swartz, the Swartz group at this time.
We saw Gerigo also, crossing that 1 trillion naira market capitalization yesterday.
Right.
And so a lot is happening in the NGX. Stocks are really on fire, laddie.
So much, my head can't handle it.
Please, just hold on, Let me just go around it and just talk. So we kick off with major equities. As I was saying with laddie, sentiments were mostly positive at intraday. Nigeria's NGX All-Share Index hit another new high at intraday. The index rose nearly 3%. To cross the 87,000 points. Stocks such as NASCON, Dangote Sugar, Transco, Lafarge, and Flour Mills have caught investors' interest. Now, let's see the close today. How, if we sustain this momentum, definitely it's going to be in the green, but let's see if 87,000 is going to be sustained. Now, South Africa, on the other hand, is still down nearly 1% at intraday. Well, let's see how that will work out for them at the close of business. But let's look at the northern part of Africa and see Egypt. The EGX30 is up at intraday 1.13%. Kenya, however, closed monthly session also in the green. Let's check out what's happening at the unlisted equities market. We've been talking about the NGX, but right now I want to see what's happening at the NASD, what's driving sentiments there, if they also getting the fire and the vibe that's coming from the NGX. And we'll joined by Mr. Guaide Longe, Managing Director and CEO, NASD. Good afternoon, sir. It's good to have you on the program.
Good afternoon. Thank you for having me.
Mr. Longe, yesterday we got news that major oil marketers in Nigeria have registered with the newly constructed multi-billion-dollar Dangote Petroleum Refinery and received approval to purchase and sell the fuel. We know that Double One PLC is one of the approved oil companies in that downstream sector and is listed on the NASD. But we want to know if after this announcement, if there's been any movement in share price for that stock price.
Well, I think that the facts, we should state the facts, and then we can then look see what the emotion is. So Double One PLC grew by 22%. I would say a simulated return for last year was 22%. That's taking in dividends and capital appreciation. Pardon me, my voice is a bit broken because I have a sore throat. I hope it isn't COVID. This year, Double One has done 9%. Now, I think that in looking at the situation, what we need to assess is what really is the effects of Double One being one of the outlets that will distribute the fuel that's coming from the Dangote refinery. So it's really just a source of products rather than a spike in the distribution process. So I don't think Double One already has a source. It's just that the source is going to be closer to hand than it was before. So I doubt that there would be a difference in the prospects of the company on the basis of the fact that its sources have changed. The prices will not change. The dynamics of pricing will not change, in my view. So we should then look at the emotion of what is driving the gains on the equities market. I think it is that people are looking to cover that gap in a real return expectation. And so you would see that people want to buy into stocks as they're rising, so that they can cover the inflation spike with the investments that they make in the equities markets. And that is fueling a lot of demand on the equities market. I believe that in the not too distant future, it will cool. People will take profits and then it will return over a period of time. And then when the fixed income markets begin to pick up, I think it will pair. So it's a good time to be in equities. I think you should watch the valuations carefully and don't buy on the top.
Definitely don't enter a bull trap. But let's look at the insurance sector. With the news coming in yesterday, the Coronation Insurance listed on the NGX has informed shareholders of plans to delist. One of the reasons given was that the current market conditions were not favorable to raise capital. That's through public equity. We know that some insurance companies, such as IGI, they're also listed on the NASD, but we want to know if this is a widespread concern for that sector, that industry.
No, I don't think it's a sectorial concern. I think it is just I think it is business enterprises thinking to themselves, what is the value I gain from being on a public equities market or even an OTC market? So it's the name of the game is how can I raise money? So there's a lot of effort or interest being driven into the private markets because the regulatory tedium is less with the private markets. And perhaps with the private markets, you're very direct as to where you're going to raise money from. So enterprises feel less of a bother with the public markets, and the success rates of the private markets begin to tip the scale as to where business enterprises are looking to raise money from crowdfunding and things like that. So it is really not a factor of the industry. It's more a factor of what my business needs are and who's satisfying my business needs. So for market infrastructure platforms, we have to redefine the value we bring to the business community to say what really is an enterprise looking to put its business on our platform for. They're not looking to advertise their business. They're looking to raise capital, and what are the efficiency channels by which we can deliver on what they require. So we need to do a lot of introspection and self-correction to be able to point businesses efficiently to where capital will come from, and effectively to where that capital will come from. Costs and costs and fulfillment, I'd call it. So I want to get that money, and I want to get it when I get it at a reasonable price.
Definitely.
So that's, I think, what is playing out on the market infrastructure platforms.
Okay. Thank you so much. Thank you so much, Mr. Egwaide Longe, Managing Director, NASD, for sharing your perspective on the program. It's always good to have you.
Thank you.
So to talk about more equities, major equities, look at the Middle East now and see how they traded at intraday. They were mostly in the red at intraday. We see Abu Dhabi was down 0.43%, Dubai also down 0.54%. Let's see, still within the region, we've seen Qatar and Saudi also down in the reds, red for them there. But look at also in the US, stock futures were mostly higher. We saw that marginal uptick for the S&P 500, the futures, and the NASDAQ futures were up, but the Dow Jones was down 0.31% at intraday. Let's look quickly to Asia, see Asian markets, how they performed at the close. They closed already. We see Dow, the Nikkei, that's in Japan, was down 0.79%. The Kospi in South Korea was also down. The Hong Kong Hang Seng Index was also down. Let's see other markets in that region very quickly. China's market, on the other hand, paired losses was up 0.27%. We see S&P and ASX 200 in Australia down for the close of business today. But Ladi, basically, we've seen markets doing this hip-hop, uppity-duppity, like ding-dong movement.
But as I always say, what Mr. Longe actually, alluded to there, said, don't buy the top.
Don't buy the top.
And I keep saying, if you must sell, you have to find the top.
But
who knows where the top is? That's where you have to decide
when to enter the market. You have to watch the trend, do your research. And just to talk about very quickly before we leave Asia, Japan has been on fire. It's crossed so many levels in terms of its all-share index. It crossed the 35, 36, 37, though it touched those levels and back to 35. But it's really doing well, despite, starting the year on a bad note.
Right. All-share indexes crossing new highs. It's quite an incredible time. Thank you so much, Will, for the update there for the global markets and the NGX right here, and also the unlisted market. But let's take it to Europe now. It's still all about Davos right now in Switzerland. And let's hear from Deutsche Welle's Lars Holter. We're seeing issues around the world meeting again, and definitely the agenda is rising levels of inequality around the world. Great to have you, Lars. Talk to us about what you're hearing.
Thanks for having me, Ladi. Yes, it's long been a tradition for anti-poverty group Oxfam to present their annual report on the opening day of the World Economic Forum. It's like they want to make sure that the important topic of wealth inequality is on everybody's mind when those elites get together for their meetings and their sessions, with plenty of champagne and five-star dinners. And so it was this year as well. And the report is, simply put, shocking. The 5 richest men on earth have doubled their wealth over the past 5 years, says Oxfam. So we're talking about Elon Musk, Jeff Bezos, Bernard Arnault, Larry Ellison, and Warren Buffett. Together, these 5 gentlemen have a net worth of $869 billion. As unbelievable as that is, it's even worse considering that the poorest 60% of people around the world have gotten poorer over the past 5 years. Here we're talking about 5 billion people. And as for the current trend, the experts think that within this decade, the world will have its first trillionaire, while extreme poverty will continue to exist as a problem for another 230 years at least, given current policies to fight poverty.
Well, I guess the question is, will global leaders gathering in Davos tackle this problem of inequality now?
Yes, of course. It's #1 on the agenda in Davos, and those wonderful people are working very hard to make the world a better place for everyone, right? No, of course not. For decades now, millionaires and billionaires have been hobnobbing around Davos talking a big game, but there's never been any meaningful follow-up, which is even more sad considering that the people gathered in Davos include many who would actually make a real difference. The billionaires are there for sure, but also representatives from pretty much any government around the world. Over the past years, the president of the US, China, Russia, India, and obviously every EU country have visited Davos. It hasn't led to higher taxes on the super rich, and it hasn't led to what Davos founder Klaus Schwab is constantly talking about. That would be a switch from a shareholder capitalism to a stakeholder capitalism. That would be a system where companies are not only focused on their financial well-being and on maximizing profits to satisfy their shareholders, but where they also fulfill human and societal aspirations as part of the broader social system. That last one is a quote from Schwab, a description of his vision. Again, one that he has never realized, and I'm sure this year, once again, Davos is all talk and no action.
Right. What are investors looking at today's market?
Well, yesterday Wall Street was closed for a holiday, so this morning Asian markets didn't have much guidance. Trading in Asia seems pretty slow so far, shares a bit lower there. There's been some talk about how the conflict in the Middle East might impact the economies of the world, and especially that it might lead the Fed in the US to not cut interest rates as early and as quickly as some had previously hoped. Same is true apparently for Europe. The president of Germany's Bundesbank says that it's too early to discuss interest rate cuts, in this case by the ECB, of course. And I would imagine that this could put some pressure on European markets today as well.
All right, thanks for the update. That's Lars Holter right there in Berlin. Let's take it to Southern Africa now. We see South Africa's finance ministers warn that next month's budget will be a difficult one as the nation's ability to service its growing debt remains a challenge. Enoch Godongwana will table the annual budget in late February when it will announce more details on the National Treasury's plans to arrest ballooning debt. As the Treasury warned of a higher debt trajectory over the next 2 years, independent economist Professor Bonke Dumisa stressed the need for a zero-budget basis to stabilize public finance and accelerate growth.
Is to be look very concerned and a very responsible citizen when you say, let us increase this 350 rands and let us move to the basic income grant, without actually saying where that money is going to come from. So the government will have, I'm not so sure whether I'm comfortable saying that they must raise over 1.2 trillion rands over the next 3 years. But there is a need to raise money just to keep afloat. The amount that we can borrow, then that is one which we must debate. And the former Minister of Finance, Ubabutito Mboweni, once said that South Africa must move to a zero budget basis. All the trade unions and public servants did not hear anything about that thing. They simply said, forget it, we do not want that thing. If ever we can move to a zero-based budgeting system, then you can pull out a lot of money, items that are there to fund certain things which we can do without. And then in that way, maybe we can start with living within our means. As it is, South Africa is living beyond its means. If ever it was a private person, an individual, it would have been declared bankrupt a long time ago. Even the debt councillors would not be interested.
All right, there you have it, the debt situation right there in South Africa. But let's head on to the crypto market now. We see it's still a very greedy market right now. Looking at the Fear Greed Index, it's still greedy, 61 points, but less than what we're used to so far in the market. But let's take a look at the headlines now in the crypto space. We're seeing right there the first ever rental agreement paid in Bitcoin, and that happened in Argentina, see a local landlord and a tenant have entered into an innovative rental agreement, marking the country's first ever Bitcoin-based rental contract. The move was made possible by recent legal amendments introduced by President Javier Milei's administration. Moving on now to crypto exchanges, we see Binance as Thailand has commenced operations there. So we see the world's leading crypto exchange have announced inauguration of its Thailand wing there. The newly established exchange, Binance TH, is established by the Gulf Binance, which is a collaborative effort between Binance and the Gulf Innova from Thailand. So I guess those in Thailand now have their very own Binance exchange. To other stories there now, we see Bitcoin and CBDCs have potential to de-dollarize the world. And that's according to experts at the investment bank Morgan Stanley. They believe that Bitcoin and central bank digital currencies can challenge the dollar sometime in the future. In their latest reports, they indicate that BTC could put the US dollar ahead as a global currency, which accounts for about 60% of international foreign exchange reserves. So let's talk to Rume Ofi now, financial market analyst. Great to have you, Rume.
Thank you, Ladi. Good afternoon, Ladi.
Fantastic. So it's still all about Davos right now. It seems most, crypto experts say cryptocurrency will also form conversations right there in Davos. What are you expecting?
So this is more or less like a new development. Before now, people usually see cryptocurrencies as something for criminals taking backstage. In fact, at some point, even in this country, Nigeria, when we talk about crypto, sometimes people look at us like, this guy should be fraudulent or not a serious kind of person, but it has come to the stage whereby this industry is taking center stage. That is, there's nothing anybody can do about it. Talking about regulation here, and it has started with the ETF in the United States. So a lot of this discussion is going to come up, and different countries are going to come up with regulatory procedures to see how it suits them so that they can incorporate it. It has gone past the stage of we're going to start, is at the center stage now, and it now behooves on a lot of people. I usually use this to strengthen some of our young people here in Africa. This is the time to bridge the gap with this technology and start tall with the rest of the world.
All right, definitely we'll be waiting out for comments coming out of Davos regarding cryptocurrency. But what are you seeing in the market very quickly now, today?
Currently, the market is overbought, and a lot of persons are still excited. But truth is, don't be an exit liquidity.
Don't be an exit liquidity. That's the advice right there from Rume Ofi. Thank you so much for coming on. Always great having your perspective.
Thank you, Larry.
Fantastic. So let's look at the top gainers. This morning, we see Clayton managing to get a double-digit gain this morning, 22.41%, 23 cents. We see Chile's token there, one of the fan-based tokens on the blockchain. And now we have, AFCON on. I wonder if they have any role to play there. 10 cents, 16.21% gain. And one of the latest ones they say is at 79 cents, up 9.12%. Let's look at the top losers now. ENS, that's down about 9.98%. SWI, also one of the new ones there. SWI token, $1.31. Aptos is also on the losers counter, down 7.02%. So we're seeing some losses here, but still, some investors taking profit in the market now, and keenly watch levels for Bitcoin at this point as profit taking continues, but it's still a greedy market, but not as greedy as we're used to at this time. So that's the show today. Thank you for watching. Don't forget to visit channelstv.com for more updates. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.